and let's welcome the guest for the day. We have Rajesh Agarwal, Head of Research, AUM Capital, and our in-house expert Kunal Bothra with us. Gentlemen, thank you so much for giving your time, and there are so many questions flowing in, so let's quickly start with the question. Rajesh, the first question is for you. Puneet from Gurgaon writes he wants to invest in mid-cap stocks which are fairly valued and has potential for an upside in next 9 to 12 months horizon. He's planning to invest around 2 lakhs, and as we see, the broader markets are showing real good signs and opportunities if we mindfully, tactfully enter into it. Help Puneet navigate through for his mid-cap related portfolio creation.
Good morning, Mansi. Good morning, Kanishka. Good morning, Kunal. There are a lot of stocks in mid-cap. It's like a buffet lying there, and one has to just pick and choose. Suggesting for some names, I would go with LIC, first one. It's one of the largest insurance players in the country. They put it around 77 odd rupees EPS, and we expect next year EPS to be around 90 odd rupees. Launching new products. Fourth quarter numbers were very good with APE and VNB all going up. We think that can give a decent return in the medium term. In the banking space, we can suggest Bank of Maharashtra, which again is a sound banking name with all good numbers coming in the last 3-4 quarters. The numbers were good in all parameters, be it deposits, fees, advances, and IAMs. Asset quality has been good. You can have a look at IRCTC. That's one of the railway plays which has been undervalued and languished from such a long period of time. So these are some of the names which one can have a look on.
All right. Thank you, Rajesh, for getting us those mid-cap picks. But Kunal, now coming to you, we have a query on Cyient. The viewer holds 200 shares at a price of 673. They want to know what's the technical view here. Is it a good time to average?
Yeah, I think it's a very good time to average Cyient, because my sense is that the stock is coming back into a recovery mode. It's bounced back from its 50-day moving average. That makes the confidence a lot more higher for the stock in the near term, and the risk reward extremely lucrative as well as attractive for Cyient at current levels. So I would suggest a buy at current levels. And my expectation is if the pattern gets fulfilled, you might probably expect the stock to even claw back to 1500 to 1600 levels over the next 3 to 6 months.
Buying at the current levels, and 1500 are the levels which are anticipated in the near short term, which is 3 to 6 months. Talking about technology counters, Rajesh, we have seen a lot of up move in the IT space. Of course, the technology heavy index, NASDAQ, is also showing signs of recovery and positivity in the US markets, and the eventual impact is of course seen in the domestic market as well. Haryana, we have a viewer from Haryana, Pankaj, writing to us. He has a stock of Zen Technology, 350 shares at 2132 levels. What to do for a short-term view? Not just Zen Technology, but apart from Zen Technology also, if you have an eye on the mid-cap IT players along with the large-cap IT names, kindly give your advice.
See, Mansi, IT has underperformed the market since quite a long period of time, since Mr. Trump took over. There have been talk that due to tariff and all, US will be going into recession, discretionary spends will go down, and that's the reason IT stocks have not done anything in the quite long period of time, except for last 2-3 months. I think they are highly undervalued. They are highly underowned because a lot of people have sold them. Despite the fact that the balance sheets are strong, they have got decent orders. Some of the companies have ventured into new areas like AI, machine learning, cloud, and all those things. In the entire scenario, I think those stocks are very undervalued. If somebody holds for a period of maybe 12 to 18 months, a decent return can be expected. In the large cap space, we would recommend Infosys or a TCS. Even Tech Mahindra is doing very good. And the mid-cap space, we have likes of Persistent or Zen Technologies. Even you have Birlasoft, Intellect Design. These are some of the names which can we have a look upon. Since the gentleman is holding Zen Technology, I would recommend holding on to the stock for some more time, maybe next 2-3 months. You can expect good returns from them.
But Kunal, now coming to you, our viewer Kaushik Mitra from Mumbai has written to us. They want your view on the finance pack. Now, they want to understand which finance company they should start investing in? Bajaj Finance or Jio Financial, or any other recommendation that you would like to make? As of now, they do not have any financial stocks in their holding. So what is like the stocks that you mentioned, what's the right price to enter for them? Their time horizon is 6 months to 1 year.
Don't have any finance stocks in your portfolio, you start off with the best of the names in terms of the pedigree as well as price performance over there. Bajaj Finance, Finserv comes out to be the top performers and top quality names. And then you go back into the mid cap end of the financial names. And then I think if you're looking at specifically NBFC and the HFC pocket, I would look at L&T Finance at current levels of 190. That's something which starts to look extremely attractive, and especially given the fact that the stock is now nearing a major breakout about that 195 to 199 to 200 mark on the longer term charts. AB Capital is something which I've been highlighting. That's something which I believe looks extremely attractive. You can look at the traditional financing stocks, in the sense Shriram Finance and Chola Finance. Even these stocks have had a fantastic last 5 years to 10 years, and especially given the kind of consistent price uptrend these stocks have shown. So I think there's a lot to choose from. Very difficult to single out just few odd names, but you can start off with Bajaj Finance, Finserv, and then maybe move on to the other list of stocks which I just highlighted.
Okay, Bajaj Twins, AB Capital, of course, Chola Investment are a few counters which one needs to consider buying them when you get an opportunity at the dip. We have another viewer, Nikhil Sharma, who writes from Mumbai. And again, Kunal, this question will be to you because he's an intraday trader and a short-term trader, of course. And he has a question whether due to Iran-Israel conflict, is it going to be a concern for the oil, energy, oil marketing, oil refining counters, and is it worth buying the oil stocks like IOC or HPCL, or one should wait and watch? Now, these days, we have seen a lot of geopolitical concerns which are grappling in, and because of which the oil refining, aviation, cement, paints, all of these counters are also on the radar. But what's your take particularly on the oil marketing, IOC, HPCL kind of stocks?
See, of course, I think there is bound to be some bit of concern which could emerge because of the issues, and the major concern is that if the issue escalates for a prolonged period of time, that's the only concern. But then I look at it purely as how the prices are indicative. Over the last 2-3 days, where the news flow has been very heavy for crude oil prices, and especially on the geopolitical news, apparently stocks like IOC, etc., they've actually come back into a recovery mode. So over the last 3 days, the stock has recovered somewhere around 5%, 4% from its previous swing bottom. So that generally indicates that maybe the prices of the stock price of the oil marketing companies are telling a different story altogether. They are indicative that maybe the markets are expecting that this could just be about a temporary blip, and you may not see any major escalation happening into the the geopolitical news front as such. So that's the take in terms of the prices. But then of course you'll have to keep an eye on whether the news flow actually deteriorates or not for the stocks. As of now, just looking at the prices, I would suggest that it's a good time to accumulate many of the oil marketing companies, because eventually if the news settles down, you might actually see a big breakout coming back into many of these oil marketing companies. So keep a stop loss, have a less position size than maybe what you do on a usual trade. But then I think at current levels, it's a good time to start accumulating OMCs.
All right, a good time to start accumulating OMCs. That's the view coming from Kunal on the oil-related counters. But coming to you now, Rajesh, we have a viewer, RK Ahuja, who's written to us, and they want your view on Biocon and United Spirits. What should they do? Should they buy them at this price? Their time horizon is 3 years minimum.
Buy from a side if your time horizon is 3 years. I think that's a decent time horizon for stocks like Biocon or USL. Coming one by one, Biocon numbers have been not that exciting, but the product pipeline is great. Their biologic business is doing well. Oncology is doing well. Even their subsidiaries are giving out decent numbers. I think for a long-term period, maybe the 3-year time horizon that the gentleman has, a decent return of around 20-25% from these levels can be expected. As far as USL is concerned, if you look at the entire FMCG pack, I consider spirits as a FMCG because of the kind of nature of business it is in. It's trading at a huge discount to that, and not to forget the kind of new product launches or debt reduction that has been done. So I think both are a buy for a 3-year time horizon.
Term time horizon can consider buying for both United Spirits as well as Bicon. We have another question. Dikshita writes to us. Good morning, Dikshita. The question is if we can get a technical view on Tata Motors, Bharat Forge and Airtel. Now for Tata Motors, Kunal, as we did see that it continued to sulk after a weak guidance for its biggest revenue contributor, JLR. Of course, the company did add that they will see benefits of cost cuts from the second half of current fiscal. But at present, if we say it's a 4.5% downtick at 682, Bharat Forge and Airtel also, of course, in the volatile market showing signs of volatility. What's the technical take on all of these three stocks?
So, there's always this tendency that if stock prices correct on the back of very recent news flow, traders generally look out for contra buying. But then you'll have to look at the impact of news flow for the stock price. And this could probably be a persisting impact for a stock like Tata Motors. So I believe in that sense, I think it's an avoid if you ask me from a very short-term play, because maybe not the entire negativity is not played out yet for the stock price, and you might see the stock going into an underperforming zone. So what could happen is that maybe at 650 level, 670 mark, the stock price may start to look attractive, but the fact that is that the stock may diverge itself from the index movement. So there could be days when the index goes into a roaring upside, but then on those days you might probably expect Tata Motors to remain as an underperformer. So that's the only concern with buying these kind of stocks at current levels. It's always better that you buy this on confirmation when the news flow starts to become a lot more positive. In that aspect, maybe Bharat Forge as well as Bharti Airtel could actually be better fit, because these stocks have confirmed breakout for themselves above their respective long-term moving averages, specifically for Bharat Forge, which has gone through a recent breakout above its 200 DMA. So I think Bharat Forge and Bharti Airtel could be slight better bets as compared to Tata Motors as of now.
Okay, Bharti, better bet compared to Tata Motors as of now. But Rajesh, now coming to you, our viewer Anita from Pune has written to us. She wants to know your view on Subros and Manappuram. Are they worth buying at the current price? She hasn't really given us a time frame, but are they worth entering at the current price?
Company is no doubt on that, but both have run up quite a lot in the recent past. After that one came in that Mr. Gadkari has suggested from 1st July all the trucks would be made EC. Subros has seen quite a run up, almost 25-30%, if not more. So buying at this point would be a bit risky, I would say. Wait for some amount of correction to set in before buying it. And as far as the other one, which you said?
Manappuram.
Yes, again, the same story goes after the RBI announcement of increasing of LTV. Manappuram has gone up like anything. So even in that case, I would say wait for some time for correction. If you want to have a exposure in gold loan company, you can have a look at Federal Bank or the Catholic Syrian Bank. They are in a better position than Manappuram Finance at this point of time. I don't say that Manappuram is a bad company, but at this point of time, the valuations have become stretched.
Absolutely. We hear you there, Rajesh ji, and the stocks have seen a lot of buying. And of course, after the RBI credit policy, the gold financing as well as the jewelry counters have seen the shine of the day, and at the same time, the other stock as well. So consider Subros, in fact, was a part of our deep dive research where our research head Abhishek Gaushan, they did a deep dive research on why Subros should be considered, and post that we have seen almost a 30% uptick on the stock price. So not a good time to buy, to enter, but if you have an existing position, can consider maintaining it. Another question again for you, Rajesh. Bimal from Mumbai has a long-term view. He is a senior citizen holding 2,000 scrips of AB Capital at a stock price of around 200. AB Capital was a technical take from Kunal as well. He says he can hold for 6 months. What price target can he see? Is it possible to see 350 plus levels, and how much time will it take to see those levels? A fundamental take. He is a long-term investor.
Very sound comment. It's very difficult to say what will happen in the next 6 months or so. But what I can say is the numbers have been pretty good. The company is doing well. AUM has increased. They are into a whole lot of products, be it mutual fund, be it insurance, be it other parts. So all in all, we have a buy call in AB Capital with a time horizon of 12 to 18 months, target of 300 rupees. So it's a buy from a side. But for a 6-month horizon, it's difficult to say at this point of time because of the kind of global scenario we are into. Geopolitical tensions are going on everywhere. So it's difficult to predict short-term trades. But what I would suggest is extend your time horizon and continue with it. And if your funds allow, buy on dips.
Well, 6 months is still short-term time horizon. It is a positive stock for that matter, but you need to increase your time frame. But if it's just a short-term view, I would still ask a question to Kunal. Kunal, you have a view on AB Capital already.
Yeah, and I'm very bullish on the stock. I've been very bullish on the stock over the last, I think, 6 months, 1 year or so, specifically at a point when the stock was at a breakout close to 175 plus mark. I still believe at 250 plus levels, the stock is a good hold. Maybe not 6 months. I would agree with Rajesh over here because 6 months there could be a lot of volatility into the markets and given the kind of news flow. But then I think if you can just extend it to maybe 1 to 1.5 odd year, then I think you can expect stock to come back to 350 to even maybe higher levels than that. So very bullish on AB Capital, but then slight extension to your time frame would be a better strategy.
All right, thank you, Kunal, for that view. Now, moving on, Rajesh, another query coming for you. It's on Axis Bank. The viewer has 3,800 shares and their purchase price was 150 rupees. Their time horizon is 3 to 5 years. This is Alok Mahajan writing to us from Ghaziabad. They want to know if they should hold or switch some portion of this Axis Bank portfolio to a defense stock. As of now, Axis Bank is 25% of their total equity portfolio.
See, first, let's talk about Axis Bank. It's a very sound bank, given out good numbers in the last 2-3 quarters, and it has underperformed the private sector banking space as such on market cap. So there is a lot of scope going forward. But since you are a huge exposure, sitting on almost 25% of your portfolio and sitting on a good amount of profit, as you said, you have bought at a very lower levels. I think booking some part of profit would be a prudent strategy into it. You can have a look at defense portfolio. If you look at BEML or a BEL, that are good bets. Even Cochin Shipyard is a good bet at this point of time because of the kind of order book these companies have, with the kind of focus of the government on increasing their defense spend, and not only domestic, but they are getting international orders also. So going forward in the near future, maybe in the next 12 to 18 months, defense as a space is looking good. There might be some amount of correction or consolidation because of the kind of run-up which we have seen in the recent past after Operation Sindoor, but still for a long-term horizon, they are good stocks. A switch to of a part of your portfolio from Axis Bank to these can be a prudent strategy.
Okay, so that's the view coming in. Of course, defense and shipbuilding spaces are on the focus radar, but a tactful strategy to get an entry into all of these spaces is what is advised. Madan, Mr. MP Mandan from Chandigarh has a question on Larsen and Tobro. He has bought 200 pieces of L&T at 2940. Each, and the question is, his view is midterm. Should he consider holding the stock or should he consider exiting from it? If we have a look at the analyst rating for L&T, Kunal, as we clearly see, it's an outperform rating, and the stock has been trading in the range of the same 3604 to 3625. Considering his buying price, he's already having a gains and a 9% uptick also in the last 3 months for L&T. But we have also seen 3963 levels in the last 52-week range. So what is your view for him?
See, I think unless you're bearish on the market or you are expecting that the markets would probably head lower, only that's the time where you can probably look at booking profits on L&T. But otherwise, if you're bullish on the overall market scenario from short term, medium term, or even long term, then I think L&T becomes part of your core portfolio in terms of stocks. I don't see any reason why you should look to exit L&T unless, as I said, that your view on the markets is on the negative side. I would suggest a hold on L&T if your position as well as your time frame is even medium to long term.
Okay, a hold call coming in on L&T. But Kunal, another question for you. The viewer Poonam Anand, she wants to know your view on Aarti Industries and also Stellite Tech. She has 75 shares of Aarti Industries at a buy price of 465 rupees, and she has 200 shares of Stellite Tech at a price of 97 rupees. What's your view there? Stellite Tech, it's seeing a second day of gains, and up move of 16% is already in. So what's your view there? Should they accumulate more at this point?
Yes, Kanishka, I think Stellite Tech has risen up exceedingly high in the last 2 weeks from 85 rupees. The stock today made a high of 119, 120 mark. So that's a very steep kind of an upside. I think it's a good time where you can look to start taking some chips off from Sterlite Tech. Maybe book out 75% of your profits over here, and then look to buy this back again on retracements, because eventually after such kind of a steep price uptrend, these stocks go into a couple of days of price correction. That's the time where you can look to re-enter into the stock price. For the other stock which you mentioned was
Aarti Industries.
Aarti Industries. I think that's a hold. What we are seeing is many of the specialty chemical stocks are actually showing signs of a big breakout, whether it's SRF.
Bajaj Finance. The question is, he's a long-term trader, and can he now shift 10 lakh or to some lucrative shares, or should he continue holding Bajaj Finance? What should be the view on Bajaj Finance? We have clearly seen the stock is trading flat post the split and the bonus news.
Continue to hold, I would say. If your funds allow, you can add on debts too. Company is extremely well, doing very well on all parameters. AUM has been rising, NIMs have been rising, asset quality is good. And even if you feel that you need a safer bet, then you can have a look at Bajaj Finserv too, because it's a holding company of Bajaj Finance. And not only Bajaj Finance is it's a holding company of the two insurance ventures, be it general or life. And then it holds into a home finance business. Their NIMs are also good. Their asset quality are also good. They have moved into AMC business too. So both these twins, Bajaj Finserv and Bajaj Finance, are excellent bet for long-term holdings. I think any dip should be taken as an opportunity to add these stocks.
All right, thank you, Rajesh, for that view on both Bajaj counters. Next up, a query coming for you, Kunal. Now, Sujit has written to us from Kolkata. He has 300 shares of Oil India at a buy price of 385 rupees, of which he had sold 150 at a price of 475. He now wants to know what should be the next target.
See, I think the stock has started to do very well for itself. This is the first or the second consecutive week where the stock is showing signs of consistency after last week's huge price uptrend for Oil India, where the stock moved from, I think, 420, 425 to almost 485 to 500 levels. I think it looks fairly attractive. My sense is that if this market uptrend continues even for the next 1 or 2 weeks, we may expect the stock to come back to levels of 520, 525 over the very short term.
That's the view coming in from for Oil India. We have seen an upsurge of around 13 to 14% in the last few sessions, and of course the crude is another factor which one needs to consider for stocks like Oil India, IOC, HPCL, BPCL. Another question coming in from Sonu is writing to us from Bangalore. The question is for Rajesh ji. He needs advice on GIC RE at an average price of 395 for about a year. It goes up and comes back to the same price as what he says, and he has bought. Is it okay to hold it for another year, or would you advise a different stock? Particularly if we have a look at GICRE, at present it is trading around 382 with a downtrend of around 12% in last 1 month.
It's a very strong company. I'm very surprised why it doesn't perform as good as the insurance venture. It's the largest reinsurer in the world, I would say. Doing excellent business. Their treasury portfolio is great. And at these prices, I think it's highly undervalued. We have a target of around 500 odd rupees in the next 1 year. So I would suggest hold on to the stock. And if by chance it comes down to around 350, 360 odd levels, one can even add.
Okay, thank you, Rajesh, for that view. Now, another question coming for you, Kunal. Giridharan has written to us from Tamil Nadu. He holds 4,300 shares of TCS at and he's currently in losses. Now, he wants to know if he should average out or wait for recovery in the stock. Sorry, he has 180. He has 180 shares at a price of 4,300. If I'm not wrong.
Yeah, so I think the stock price is currently at 3,500 levels, which means if you're seeing a loss of somewhere around 17 to 18% approximately for the stock price, I would suggest to hold on to the stock as of now. My sense is over the last few days, we've been highlighting that IT stocks, largely the larger cap names, they could see a decent recovery. We've seen Infosys moving up higher to now 1650 odd mark from 1550, 1570 levels. I believe even TCS can see a decent rise from current levels. So purely from a short-term play also, I think I would suggest a hold on TCS.
Okay, consider holding TCS, and as we clearly see, the IT majors as well as the broader market, mid-cap, small-cap IT names are doing good, well in the trade at present. Rekha writes to us on cement pack, Rajesh, she's holding 200 shares of Ambuja Cement at an average price of 260 per share. The question is whether she should consider booking profit, or at the current market price, she should consider adding more stocks. If we have a look at the current cement channel checks, of course, we have seen a demand surge in the last few quarters, but considering the seasonality factor as well as the monsoon updates, maybe there can be a downside seen in cement sector. Rajesh, what will be your fundamental view on Ambuja Cement and overall cement sector?
See, we are very bullish on the entire cement pack asset because of the fact that infrastructure is taken up, real estate is doing well, and both of these sectors consume cement. The numbers have been quite good. They have taken price hikes in some part of the country, and this seasonality factor is there every year. So after monsoon, again the demand will go up. As far as counters are concerned, we are very bullish on Ultratech asset because of the kind of capacity. It's one of the largest. They're expanding like anything. So if you want to book profits in Ambuja Cement, what I would suggest is switch to Ultratech. That's a better bet at this point of time.
All right. Thank you, Rajesh, for getting us that view. Well, with that, it's time to wrap this edition of Buy Now, Sell Now. Thank you so much, Kunal and Rajesh, for joining us and helping us decode all the queries that our viewers are sending us. But with that, it's a time to bid goodbye. And more news and updates are coming up on the other side. So stay tuned to ET Now.